Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hi, if you're celebrating Janmashtami today, a very happy Janmashtami to you. A very warm welcome to this special episode of Coffee and Crypto. I'm Arun Singh, and today we'll be talking about doxing and also crypto insurance. But before that, we'll give you all the top stories that have ruled the headlines in the past week, starting it with Ethereum. Bloomberg has reported that Ethereum founder Vitalik Buterin has forecasted the blockchain merge on September 15. The merge is an upgrade to make the platform energy efficient by shifting it from proof of work to proof of stake. We've covered that in several episodes on this very show. The third and final Goerli test has also been successfully completed. Moving on to the next story, along with bear markets this year, crypto crimes have also fallen by 15%, but there are some exceptions as well. Chainalysis has come up with this data where they say cryptocurrency transaction volumes this year for both illicit and legitimate entities are tracking behind 2021 through July. The report states if we dig into specific forms of cryptocurrency-based crime, we find that some have actually increased in 2022. So scams have reduced, but when it comes to other crimes that have also seen a jump. Now, what are those illicit activities? Well, that's hacking and stolen funds. Moving on to the next story, troubled crypto lender and borrower Hodlnaut on Friday laid off about 40 employees since pausing crypto withdrawals and disclosed an investigation by the Singapore police. The company, which applied for a form of creditor protection last week, did not reveal further details about the police proceedings. Moving on to the next story, Chinese internet giant Tencent Holdings will no longer release digital collectibles to the public after regulatory scrutiny of NFTs increases in the country. Their NFT, their non-fungible token platform, is called Huanhe, which was officially launched early last August. But the company said that the owners of existing collectibles will still be able to hold, display, or request a refund for the possessions. And now the last story, US supermodel Bella Hadid has stepped from the catwalk into the metaverse with the launch of CY Bella, a collection of non-fungible tokens featuring artwork based on 3D scans of her face and body. She told Reuters that she was intrigued by shared virtual world environments and that she wanted to make cool versions of herself after becoming obsessed with video games during the COVID-19 lockdown. Here I am, Arun Singh, in my real form. This is not my meta version and you're definitely not watching me in the metaverse. But now we'll talk about crypto insurance and we're doing some real talk here. For that, we'll go to Coffee World. Crypto insurance. What is it? Who needs it? How do you get it? So insurance in general provides a guarantee of compensation for any loss, damage, illness, or death in return for payment of a specified premium. Crypto insurance is no different. It allows for blockchain and crypto-based businesses to acquire coverage for possible losses they can face. Recently, a decentralized finance platform, Wormhole, got hacked for $325 million. Beanstalk cryptocurrency project was robbed in April, where the hackers sent themselves $182 million. Harmony's Horizon Bridge was hacked for $100 million in June. What I'm trying to say is it's quite common to witness hacks and thefts in a world as techy as crypto. So what all does a crypto insurance cover? Number one, hacking, which eventually leads to stealing. So number two, crypto theft. According to the data on blockchain and analytics firm Chainalysis, more than $14 billion in crypto was stolen in 2021. And number three is private keys. Some insurance providers offer end-to-end encryption and secure storage of private keys. So in case you forget it, you'll be able to recover your digital assets. Now, what it doesn't cover, because there are few losses that crypto insurance might not cover. Losses resulting from unauthorized access to your personal account. If you end up sharing sensitive information with a scammer, then that money is absolutely gone. What are the types of insurance. So let's say major types of crypto insurance that are available in the market. First is custody insurance. This helps when you lose access to your crypto keys or when business holding your assets goes out of business. Then there's DeFi insurance, that's decentralized finance for crypto insurance. This ensures smart contract failure, the base of a DeFi. And then there's crime insurance as well, which is self-explanatory. And I'll also give you some popular players' names which are there in the market. One is Nexus Mutual. It's an Ethereum-based platform that creates insurance products with community-driven management and financials. One can secure risk and potential bugs in smart contract code. And then there's Lloyd's, which is very popular in the insurance market. And in the month of February, they launched a new insurance policy to protect cryptocurrency held in online wallets against theft or other malicious hacks. We'll be opening this for discussion with our guests. We have Srijan Bhardwaj, serial entrepreneur, and then Sharat Chandra, VP Research and Strategy, Earth Idea. Very warm welcome to both. Sharat, we'll begin with you. Who needs it the most?
Everyone who is holding digital assets need crypto insurance because it's mandatory that you insure your assets. The way we insure our bank deposits. So bank deposits are insured by Deposit Credit Guarantee Insurance Corporation. It imposes a limit of 5 lakhs. Up to 5 lakhs of your deposits are insured. So in a similar way, crypto deposits or crypto assets should also be insured. And I think some of the exchanges are taking a step forward in providing custody insurance, right? For example, BitGo, one of the custody providers, is providing insurance. So I think it also safeguards users, especially first-time users who are not so well versed with how they can hold their assets, hold the keys to the assets, right? So first-time users should definitely go for crypto insurance so that they can safeguard themselves from even attacks, right? So if there's a smart contract bug, that can also be taken care of.
Okay.
Yeah.
Srijan, how does one really go for insurance? You know, general insurance, as far as that is concerned, you go to an agent or you have so many popular players in the market, you just go there and get it. How does one get crypto insurance and how does one decide which player to go for?
So when it comes to crypto insurance, it depends on the user itself, what use cases the user has. So for example, if I am very active into DeFi, I would want to go for an insurance cover which can get me all the risk mitigated with DeFi. So for example, smart contract vulnerabilities or any stablecoin depegging, which we saw with USD. And when it comes about choosing which insurance platform should we use, there are multiple platforms. So for example, Insurance is there. It's one of the biggest DeFi related platforms. Then there is Armor and other players as well. It depends on your requirements. For example, a lot of these platforms have a minimum cover. So for example, you need to buy insurance for cryptocurrencies worth $1,000 at least or $1,500 at least, which can be little too much for a lot of retail investors. In that case, you are left with limited options. And for some people, it can be about the duration. Some of these platforms don't have an active plan for all the durations at the same time. So it's about picking what fits your requirement and then choosing from it.
Now, Sharat, are there any security or systematic risks involved in crypto insurance?
I wouldn't call it a risk, but something, maybe a product innovation is required where maybe the underlying value of the crypto asset itself changes, right? Or shoots up. And then when you lose that asset, how much of sum assured can be given back to the holder? That can be one of the challenges, right? So the insurance has to be dynamic. If the assets I'm holding, if the price goes up, right? So, and if I lose the asset then, right? So how will the losses be recovered? How will the user will be indemnified, right? So that is one major area, I would say.
Okay. Srijan, you know, we also spoke about what all it doesn't cover. So let's say if someone is scammed, can you think of any other situation where crypto insurance won't really be able to help the investor? One is, of course, scam. And second, you know, when you end up giving your crucial and sensitive information to someone, then of course that is not covered.
Yeah, exactly. And a lot of times what a lot of people make the mistake is that the same mistake which we make in our real world, that we don't read the insurance offer carefully and we don't understand what it covers and what it does not cover. So when it came about the recent USD pegging, a lot of people, they had not taken the insurance for it, but they were assuming that it would be covered under smart contract vulnerability. Versus if you see a lot of insurance providers, they have a separate column for USD pegging. So initially, every insurance platform had just one or two contracts. For example, you could take, say, against smart contract vulnerabilities, then you could take against the protocol, and then they started expanding. And as they started expanding, they also expanded the services with the literature. And if one user assumes that this cover would provide me a cover for this XYZ service as well, and it does not, in that case, a lot of people are in for a surprise, as we saw the last couple of weeks. So I would highly recommend everyone to read the entire literature of what is covered and what is not covered, and do not assume.
You reminded me of that guy who goes like, read the information brochure carefully. Very quickly.
Yeah.
is what we hear as a disclaimer at the end of every insurance ad. But what you're saying is that listen to that guy.
Absolutely.
Okay.
Can I add one more point?
Sure, Sharad. Go ahead.
Yes, what I'm saying is the way we share passwords, it's not quite novel in the Web 2 world to share passwords among friends and families. And if you lose access to your funds because you are sharing your seed phrase with your friends and family, right? So I think that will also come under unauthorized access. So I think people have to be mindful about keeping their seed phrases secret and do not share even among family members to make sure that they are.
Sure, we're talking about individuals now, but let's move this conversation further and talk about companies also going for insurance. We've seen several protocols failing or falling prey to all the attacks that are quite common, or these scams or these hacks that attack protocols as a whole. So do you think companies should also look at getting an insurance cover, Sharad?
In fact, look at what happened in Ikala network, right? The one which was built in Kolkata.
We're losing your audio. Srijan, would you like to take that answer, and then we'll come back to Sharad?
Sure, definitely. See, when you are acting as a custodian for people's funds, you should definitely be taking cover, because you cannot take the risk of managing other people's money without buying insurance. It's extremely risky and extremely stupid to not buy cover when you are handling other people's money, because in that case, you're not even liable for your own money, but for other investors' money. And a lot of these companies have done this, and we have seen it time and again that these companies who pay a little 5% extra per year for all the money that they're handling, in case things go south, they are able to recoup the money of their investors, and then the investors end up trusting these companies more, who get the cover.
Sure. Srijan, I had one more query. Especially in our country, crypto is an unregulated sector. How do we expect an insurance company or a platform to protect?
Right. So in this case, this is the beauty of crypto, that it's entirely borderless and it's entirely permissionless. So for an insurance provider, it does not matter which part of the world we are from. We could be in India and they could be in US, and we would still be eligible for the insurance if we have bought the right cover. Okay. And we would be paid in our wallet.
Quick reaction from Sharath on this. Are there any checks that one should really do before finalizing an insurance company? Because this is an unregulated sector and you have to be very careful while you go for that insurance cover.
Right. So in fact, we should look at insurance providers who are global in nature. For example, the custody services provided by BitGo, I think they have joined hands with Lloyd's Group or even Nexus Mutual for that matter, right? So insurance entities who are global in nature can easily offer insurance protection to crypto users. So we should look at entities which are global in nature.
Thank you so very much. That was a great crypto catch-up over coffee. And now we move on to our next segment, which is MCQ. That's My Crypto Queries, where we take your queries and our expert answers those. Ajit Khurana, founder of Flexical, joins us. A very warm welcome. We have first question from Akash. He's asking, when will India launch its own currency?
So here's the thing, you are referring to the RBI's Digital Rupee when you are referring to India's currency, the CBDC, Digital Rupee, whatever you call it. In reality, I expect it to be launched at least in a test version in this year itself, 2022. And I expect another 24 countries to do that in the same year. Whether people like you and me will be using it on a daily basis, well, remains to be seen. But don't get too excited about it. When you actually use it, you may not perceive too much of a difference between that and the UPI-based payment wallets that you see.
Yeah, a lot of experts have been pointing out that it might be just the digital form of Indian rupee. Okay, moving on to the next question from Ansh. She's asking about the volatility of the market. He's essentially written on Instagram, "Ye itna upar niche kyun hota hai?" So he's asking why the market is so volatile. Why is crypto so volatile?
There are 4 reasons for why crypto is volatile, and when I tell you these 4, you will also be able to make a prediction about whether it will remain volatile forever. Number 1, compared to stock markets, forex markets, real estate markets, crypto is a very small market. So little money coming in gets everybody excited, and little money going out gets everybody depressed. That's reason number 1. Reason number 2 is that the total number of people in the crypto market is increasing at a very rapid pace. At least globally, in India, after the TDS implication, the speed has slowed down, maybe even stopped. But since the new people are coming in, the new people have not gone through the market cycles. So they tend to overreact when things go good or bad, and probably make some wrong decisions until they make some loss, and then they become mature. Reason number 3 is that new tokens are heavily marketing themselves. I have never seen an ad for Bitcoin or Ethereum where Bitcoin company, there is no such company, comes and says, so that doesn't happen. So this is the third reason that new token issuers, many of whom could be avoided, actually are doing this. And the fourth thing is that because there aren't any high risk, high yield return opportunities that are comparable with crypto, but still not being a pure gamble, that is the fourth reason why volatility is high.
Last question, which is about the minimum age for investing.
There is no legal minimum age from crypto's point of view, but each country has their own. Usually the global minimum is around 18. So if you are 18 years or above, you are quite likely eligible to invest. Please go through your bank account, never deal in cash.
Thank you so very much, but stay with us as we talk to you about doxing after a very short break. So we're taking a very quick one, and then we discuss doxing, what is it and what does it mean in the crypto world. Keep watching NDTV. Hi, watching Coffee and Crypto. I'm Arun Singh, and now we are going to discuss doxing, which is an internet slang, but why is it relevant in the crypto world? You'll get to know after you hear our explainer. So doxing in layman's terms is posting someone's personal information online without their consent. It's an internet slang, as I mentioned, and it refers to dropping documents, and it comes from the word doc, the short form of document, hence doxing. Now, how is it relevant in the crypto world? Well, individuals here use anonymous identities to protect their privacy. The best example is of the OG, Satoshi Nakamoto, who started Bitcoin, the first ever cryptocurrency. His identity is known to nobody. However, many cryptocurrency projects are now choosing to reject this idea to build trust. They choose to be public with their identities and connections to their projects. Such a team is called Dox team, which means the information is out there, their identities are known, and there is no anonymity. So why do some people hide their identity in the crypto world? Well, number one, it's a safety measure against hackers for some. But number two, some also do it as a part of the crypto culture. As I told you, it all started with the onset of the crypto madness, and that is Bitcoin being started by Satoshi Nakamoto. But we'll discuss this in detail with our guest Ajit Khurana, founder of Reflexical. Ajit, very warm welcome once again. So, first of all, this concept of hidden identities, is it a taboo or essential?
I can't resist pointing out that Arun Singh and Ajit Singh are talking about doxing. Sorry, I just had to say it. Having said that, let me just answer your question. Pre-Web3, it was inconceivable. Pre-Web3, it was inconceivable that you would be, participating in an economic setup such as a company, token, project, whatever, where you don't know who the founder is and who are the people behind it. I think you literally don't know that. So I don't know, call me old-fashioned, but the fact is that it makes me very uncomfortable, because despite some of the reasons that you listed, I find that accountability is greater when we know who the person is. Otherwise, you can't even hold somebody accountable. Lot of crypto projects, including the world's most famous NFT project called Bored Ape Yacht Club, were anonymous when they started, and some journalist somewhere went and doxed them. So I think that both of these are internet phenomenon, Web3 phenomenon. On the one hand, I don't like teams that are not doxed. On the other hand, I like people who go out and unearth the real founders. I'm waiting for the day when we will dox Satoshi Nakamoto.
Yeah, and also, since we're talking about recent incidents, one of the founders, actually two of the founders of Bored Ape Yacht Clubs, they were outed, they were doxed. So that was done, I think, for no reason. That doesn't do any good to anyone. So would you say that that's like just to create hype, or does it do any good maybe?
Sometimes when I hear that certain movies are getting banned in some companies, I ask the same question, that was it really a ban, a boycott, or is this a matter of marketing? So I don't know the reality behind it, but I do feel that when somebody is doing a project, they don't come forward in the public, and then there is this grand unveiling and suddenly people find out, it does create a hype. So I think at least half the cases are pure marketing and nothing else.
But let's say someone want to retain their anonymity. How can they prevent doxing?
So, Edward Snowden and the likes are actually trying to retain their, hide their identity even from the government of the US, and they are managing to some extent. So it can be done. But in this digital world, it is very, very simple with location, with devices, with internet protocols, IP addresses, etc. Having said that, I must tell your viewers that, hey, as founders of crypto projects, please focus on creating value as opposed to remaining hidden. Because if you are being hidden to avoid regulations, then that is going to come to bite you soon.
Okay, I also have a PJ to end this. Now, doxing time ends and relaxing time begins, Mr. Khurana, because we've come to an end of this show. Thank you so very much for joining. This is Coffee and Crypto. I'll see you on next Friday at 6:30 p.m. on NDTV 24/7. For now, it's goodbye from myself. Bye.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.